Welcome to Market Core on IX24. I'm John. Today, we'll walk you through the top market stories from the last week, together with our team. We begin with Christine, bringing us major investment updates from Dubai and the UK. Christine, over to you.
Thank you, John. Imagine living in a place with no income tax, barely any crime. You know the place I'm talking about, Dubai. This week, Dubai Investments announced they will sell up to 25% stake in the Dubai Investment Park, or DIP. It's a massive 2,300 hectare of mixing industrial, commercial, and residential facilities. More than 160,000 people live and work there, alongside over 5,000 businesses. The IPO marks a big milestone following other successful UAE listings, including Dubai Holdings' $585 million bought back in May. In the global markets, the UK government secured £150 billion in the US investment during President Donald Trump's state visit. That deal is expected to create around 7,600 new jobs. Big names are part of it too. Google's parent company, Alphabet, is putting $6.8 billion into UK artificial intelligence. Meanwhile, the investment flow is not one-sided. British companies are pouring money into the US as well. Pharma giants GSK is investing nearly £22 billion in research and development and manufacturing over the next 5 years. At the same time, American tech firm Armantum plans a major push across the UK, from Glasgow to Warrington and the Midlands, creating more than 3,000 jobs. Lastly, private equity powerhouse Blackstone is also betting big, with a £370 billion spending plans across Europe over the next decade.
Thanks, Christine. Strong signs of investor confidence there. Now, to Surya. Asian markets are soaring as central bank ease up. Surya, what's driving the momentum for Gen Z's investors?
Thank you, John. Asia just wrapped up the week on a high. Japan's Nikkei jumped 0.7% on Friday to hit another record, locking in 2% weekly gain, and markets across the region are rallying. The reason? Global central banks, including the US Fed, Canada, and even Norway, are signaling more easing ahead. That means interest rates are hitting lower and investors are jumping in. So, what does this mean for us, especially Gen Z investors? Well, when rates drop, borrowing gets cheaper. Good if you're thinking of investing, starting a business, or even buying property. But there's a trade-off. Your saving account earns less and inflation could creep back in. The key takeaway? Lower rates usually push money into riskier assets like stocks, crypto, and even gold. That's why we're seeing record highs. So, the big question for Gen Z is, do you ride the wave or play it safe and hold cash? Back to you, John.
Appreciate that, Surya. Opportunity is big, but risks are real. Over to Ploy for this week's bonds market pulse. Ploy?
Thanks, John. Here's what's moving the bond markets last week. In the US, Treasury yields has moved up. The 10-year is trading around 4.08 to 4.11%. As markets digest the Federal Reserve's recent 25 basis point rate cut and its caution on future easing. Over in Europe, the ECB remains on hold. Recent commentary from policymakers underscores that despite inflation forecast revisions, there's no urgency for further rate cuts. Inflation deviations must be persistent before policy is changed. In Asia, attention is on Japan. The Bank of Japan holds its policy rate at 0.5%, but signals and expert commentary suggest a potential rate hike may be possible in October, with persistent inflation above target and also pressure from import costs tied to a weak yen. With bond yields rising, central banks staying cautious, and inflation still in focus globally. Financial conditions are tightening. Investors are watching closely. Will rate cuts come sooner, or do we face a longer pause? This is your bond market's pulse for this week.
Thanks, Ploy. Bond markets really keeping investors on edge. And finally, Manish with updates on India, US tariff, and tech stock. Manish?
Thanks, John. Recently, India and the US had positive and forward-looking trade talks. India's chief economic advisor said that US might soon remove the heavy imports on Indian goods and cut reciprocal tariff from existing 25% to 10 to 15%. Switching gears, after Nvidia invested $5 billion into Intel, Intel's stock price jumped by 30%. However, due to ongoing tariff tension between China and the US, China has asked its companies to stop buying Nvidia's new AI chips. If that happens, Nvidia's stock could face a big drop in near future. Meanwhile, the UK government borrowed a massive £17.96 billion in August. This shows the country is still facing serious financial pressures ahead of key budget decisions, with spending far outpacing income. But despite all the ups and downs globally, Indian stock markets are holding strong. They remain resilient thanks to strong domestic spending and the big investment in infrastructure, which are helping the economy grow steadily. This keeps the big picture interesting, showing how global finance is always changing, but also how local strength can make a big difference. Over to you, John.
Good points, Manish. Global tensions are rising, but India's holding strong. Today, we covered Dubai's major IPO plans and record UK investments, Asian market riding central bank signals, bond yields keeping investors cautious, and how India stays resilient amid global tension. That's your market pulse from around the world. Thanks for joining us here on Market Core at IX24. I'm John. See you in the next update.